All right, let's begin. Good morning, Checkmate crew. Today we're going to take a look at junk bonds, advanced decline line, and how it can help us trade risk assets. Okay, so today's a special session. We won't be going through our normal routine today. Today I'll just be going through junk bonds. So I've been getting a lot of DMs and questions about how to use the junk bonds ADL, our advanced decline line, and what it really means. And so today we're going to be doing a deep dive into that. So what are junk bonds? Okay, so junk bonds are bonds that are issued by companies. All right, and so if you've got a certain credit rating, those are considered junk. So if I believe it's Moody's BAA or under is considered junk bonds. Our S&P rated B or lower, if I recall correctly. But yeah, so there are there's a certain definition to it. There is the opposite of a junk bond, something that is investment grade worthy is called an investment grade bond. But junk bonds are the riskiest portion of the bond market. Okay. You know what? Let me clarify that. So yeah, junk bonds are rated triple B or lower. Okay, so if they're rated triple B or lower, then they're considered junk. All right. So in that case, why do we track that? Well, the bond market is a much bigger market than the equity market. Okay, equity markets tend to be or equity markets are smaller than the bond market, and we usually see signs of huge trend reversals in the bond market before we see it in the stock market. Again, bond markets are much bigger. The junk bond market is way bigger than the stock market. That's where a lot of companies, they issue these bonds to borrow money to operate. Okay, they can either sell shares or they can issue bonds. All right, and if their credit rating is triple B or lower, then they're going to be classified as a junk bond. All right, and so when we see the junkiest part of the bond market, if we see that not doing so well, that could mean that the stock market may see some volatility soon. Okay, if we see that the stock market is coming down and it's in a downtrend, but then junk bonds are seeing advances and we're seeing buying in junk bonds, well, hey, we might see a trend reversal and we might see the equity markets going up. So let's just take a deep dive into this. All right, and let's just take a look at our junk bonds ADL. Okay, so this is right here, our junk bonds ADL line. We were not able to update this today because the site is down. This is where I get the junk bonds information from. You can actually get it yourself. They don't have it for today, but let's look at the past business day. So what we're looking at is the high yield portion. Okay, high yield, this is what we call the junk bonds right here. Junk bonds have higher yield than investment grade bonds because there's more risk, right? Just think of it yourself, like think of your one of your buddies. All right, and let's say this buddy of yours, every time you lend him money, he always and he says, oh, let me borrow $100 from you, and I'll pay you back next week. Next week comes around, he's not there. He doesn't have the money. He says, oh, the ATM didn't work, whatever. He's that friend, right? He's a higher risk, right? He may not pay you back as quickly, or as he said, you might charge him a little bit more interest because, well, he's a bigger risk, right? Well, if you've got another friend who's, when he says, oh, let me get $100 from you, and he says, and he always pays you back, he says, oh, I'll pay you back next week, but then tomorrow comes around and he already has your money for you. you know, that's a friend you might not charge as much interest because the risk is lower. Okay, so you can think of it that way. All right, if the risk is higher, you're going to charge more interest for that, just because it's a higher risk. So high yield bonds, junk bonds have higher interest. Okay, so that is why maintaining a good credit rating as a company is important, because your debt financing becomes cheaper. Okay, but if you don't have the finances, if you don't have the assets, if you just don't have that credit worthiness, well, your credit rating goes down and you're going to be charged more interest. So high yield, okay? High yield is junk bonds. So what we take is we take the advances over declines. So issues traded. I know, you know, in the past videos, I'd always talked about junk bond issues. Junk bond issues are not quote unquote problems. That's not how we use the word issues. It means bonds that were issued, like, bonds that are traded out in the market. That's what we mean by issues. Okay, so when we have issues or actual paper junk bonds advancing, all right, that's going to come up here. Advancing means that they went up in price. All right, declines means they went down in price. And so, you know, we take the ones that went up versus those that went down. We subtract the two numbers, and that number. So today, so on Friday or on the 25th, we saw that advances were higher than declines. So that day, it was a positive number, advances minus declines, right? And whatever that number is gets added to the previous day's number. And if you keep doing that over a long period of time, you start getting a line, okay? So when was the last time we saw a negative? We saw a negative on the 17th. So let's just take a look at the 17th. All right.
The fourth industrial revolution is changing everything from...
Okay, so there's the 17th. And on the 17th, you can see that there was a minus of about 370, 377 or so. So again, there was advances minus declines. That's a negative number. That negative number gets, you know, for that day, it gets added to our line and it goes down. Okay, so that's how overall our junk bonds advance decline line gets formed over a period of time. All right, and so let's take a look at, you know, how this is actually useful for us. All right. So I've actually created a couple of charts here. And one of the charts that I wanted to go over was 2007, 2008, because that was probably our last major recession. Okay. The junk bonds ADL line is more useful in looking at these types of longer term trend reversals. So when we have a recession, okay, when there are systemic issues to the economy, generally it's not like a quick sell-off, okay, as people think. It's not like a risk off or like a risk event. All right. Usually when we see a risk event, everything drops all of a sudden. You know, it's usually something very surprising, like something like COVID, for example. Okay. Something like COVID, for example, we're not going to see the junk bonds. We're not going to see signs. Well, you know, that although there were some signs that, you know, during COVID that things may turn south, you know, it's not going to be as gradual as something like a systemic issue, okay, or something like inflation or something like, you know, high debt in the economy. But let's just take a look at an example. So 2007, 2008, okay. If you remember in 2007, 2008, we had all these bank failures. We had all these issues, you know, in the economy. Real estate was over leveraged. People were using securities on real estate. They were securitizing it, and then they were securitizing the insurance that backed those securities. And then, you know, it just became a whole issue where, you know, people were over leveraged on one asset class, and we saw some banks fail because of that. Okay, so how is this useful? All right. So even though most people remember 2008, Bear Stearns failing in August or September of 2008, the market actually topped out in October of 2007. October 2007. October 2007 is right here. When you see my mouse cursor where I'm circling, that is the highs of the market before the market took a dump. All right. However, our junk bonds ADL line already created a downtrend. We were seeing a lower low and a lower high already. Okay, we saw this trend before 2007. So those the people who actually paid attention to the debt market actually saw 2008 coming. There were a few people who actually saw it coming, and the way they saw it coming was through the bond market. The junk bonds ADL was already in a downtrend before the market actually topped in October. It actually made a lower low and a lower high, okay? And it already was in a downtrend, all right? Now, in 2008 also, in the bottom of the market happened around March of 2009. All right. Now, in March of 2009, we already saw the junk bonds advanced decline line make a higher high and a higher low. All right. And that showed us that a trend reversal was about to happen. Okay. While the market made a lower low, the junk bonds ADL made a lower high. Okay. So I remember here a lot of people, I was trading then, a lot of people were saying, including myself, at that time I didn't, I knew about this, but I didn't really focus on it too much. But at the time too, I thought, right here, oh, it's going to go lower because it made a lower low. Oh, we're going to go lower, but I was dead wrong. Everybody was dead wrong. If you track this junk bond ADL and you actually listened to it, you were right. Okay, the junk bonds market was actually showing strength at this moment. And so this was then the mother of all buy the dips, this right here in March. Okay, so we have a thing here in Checkmate trading called the MOAB, the mother of all buy the dips, and part of our one of the biggest components of that signal is the junk bonds ADL line. If it can make a higher high, higher low, that means that's a very good indication that we're going to see a trend reversal, and that the downtrend is over, and then we're going to start an uptrend. Same thing. If we see a lower low, lower high on the junk bonds ADL line, it means that, hey, this uptrend might be over. We're going to see a downtrend in the equity markets. It's a pretty good indicator of that. And in 2007, 2008, it gave us that signal. It actually gave us that signal well ahead of time. And it actually also told us, this one right here, and we're in right now 2022. In 2022, it also did that too. The market actually topped out at around, end of December, early January. But already our junk bonds ADL line was already showing a trend reversal. Okay, it was already making a lower high. Actually, it gets cut off right here. I wish I could. Let's actually change this. Give me 1 second. 41. I'm gonna manually change this. Let's take it about 45 days back. So 41.15. Okay, 41.15. Let's just go back. I think that should go back about a month or two. Yes. Okay. So as you can see here. Let me actually expand this. So if you actually see here, the junk bonds ADL line was already in a downtrend since October. Okay, since October, it was actually in a downtrend. And I remember, remember guys, during that November, December period in 2021, I was telling everybody that this was when I was warning people about inflation. This was when I was warning people about a potential for a lost decade in stock prices. This is where it came from, okay? We saw a downtrend happening in the junk bonds ADL line for 2 or 3 months before the stock market did, okay? The stock market actually made a high in January, end of December, early January, but the junk bonds ADL line was already coming down from October. Okay, this gave us a couple months head start, and already I was getting out of my tech positions. All of this was happening around the end of the year. Okay, so I was telling everybody, about this around December, November. So this was my biggest clue. Okay, and sure enough, there we go. The downtrend happened. Okay, now. Will we see an uptrend in this, in this wave of, in this bear market? Are we going to see this uptrend? Well, in order for that to happen, we're going to need to see this make a higher high. It needs to get above this. Okay, it needs to make a higher high, and then it needs to make a higher low. All right. So we are still weeks away from that. Okay. So there's no signal. There's no MOAP signal right now, but I just wanted to give you like the recent kind of history behind it. All right. If you look at, again, 2007, 2008, as you can see here, the downtrend already happened before this. So if you want, we can actually take this back just a little bit more, so you have a better idea here. So let's actually go back about 30 days. So we'll go back 30 days. 30 days and go back again 30 days. Okay. So if we go back 30 days, see here? Already, again, lower low, lower high. The high in the market was here. It was October. Okay, so again, we made a lower low. So this was the low here, low, lower high. All right, so we see these trend reversals happening in the junk bonds market first. All right, same thing actually. If we take a look at, this was the run up to 2008. Okay, as you can see, it was an uptrend. Right, everything was in an uptrend. And then as we get closer to 2000, end of 2007, it made a downtrend, okay? So another one is 2018, 2019. Remember in 2017 or so, we had one of the best bull markets. And then in 2018, we had two really large sell-offs. Okay, in 2017, everything was going up, right, all the way to January. I remember January of 2018 in the beginning, markets were going up like 5-10% a week. Okay, it was just crazy. I remember the VIX was super low. The VIX was like in single-digit territory at the time. All right, but starting in November, December, we started seeing lower highs and lower lows in the junk bond ADL line, while the S&P 500 was having this blow off top. Okay, the S&P 500 was having this huge blow off top. We were in like the mid 2000s, 2500 at the end, and in the last quarter we almost went up all the way to 3000. Okay, which is a crazy rally. Okay, at the end of 2017. Okay, the Trump tax cuts were just passed. It was huge euphoria in the market. Bitcoin went from 3,000, 4,000, all the way up to 16, 17,000 at the time. And people were very euphoric about all types of risk assets. Although, if you looked at the junk bonds market, it was already making, the advanced decline line was already making lower lows and lower highs, okay? Before the market even had its blow off top, okay? It gave us that warning back in the beginning of 2018, all right? And boom, there he goes. Okay, and there it went. All right, and it still kept going down. Even though the market kept going up, it still went going down. And what happened at the end of the year? We had that huge, remember in Christmas 2018, around that time, around the end of December, we had a huge drop in the stock market. It went from, close to 3,000 all the way down to about, I believe it was around 2,200 or so. So it was about 20 to 25% decline or more in the market in just that 1 month. It was a huge decline in the market, and again, our junk bonds ADL line never really recovered. Okay, before that. All right, so it showed us that, hey, there's still some weakness in the market that potentially is waiting for us on the horizon. And it did. It went down, okay? The markets went down. The junk bonds ADL line never recovered. It did recover afterwards, though. Afterwards, it did make that higher high. And boom, there we go. And then the markets can resume its uptrend again, okay? So this is a good way of using that. Now, where it doesn't work as well is a risk event. Okay, and a risk event is where something happens like COVID. All right, very unexpected. Not a lot of people saw it coming, and so in that regard, we did see when that sudden risk event happened, everything just gets correlated and everything just gets sold off. So including junk bonds, stocks, crypto, everything just sells off, okay? However, was this going to be a systemic issue or not? Well, we also saw the junk bonds ADL recover very quickly and actually made a higher high before the markets did. So if you only acted on the junk bonds ADL, you may have missed out on this part of the rally, but because of that higher high, you would have entered around here, or maybe after the next pullback, maybe around here, and you still would have participated in most of that rally. You would have just missed out on the first bit. And in trading, you can't always get the lows, and you're never ever going to enter at the low, and you're never going to exit at the peak high. Okay, you're always capturing that middle. All right, and as a rule of thumb, a lot of traders say that what you're not going to get the first 20%, you're not going to get the last 20% of a move. You're fighting for that great middle, that 60% of that move. Okay, that's really what you're trying to profit off of. All right, and that's what most traders, they know. That's a rule of thumb for most traders. But anyway, the junk bonds ADL line already made a higher high before the summer. All right, and so you would have entered then, and so that's why the junk bonds ADL is part of our MOAB. So when it's more of a risk asset, I usually switch over more to looking at the VIX. All right, looking at the VIX and looking at the options positioning. But for more rolling type of bear markets, for example, the one we're in right now in 2022, or the one that we saw back in 2007, 2008, this is where the signals become the strongest. This is where it really gives us that huge edge, sometimes weeks in advance, and sometimes it shows us like this. It becomes a good lie detector. Oh, is this the final sell-off? Well, if it's a higher high, higher low, that gives you that conviction to buy that dip, okay? So usually this works very well in those longer, more drawn out bear markets. Whereas if it's more of a risk event, usually the options positioning and options trading will more take over. And usually your buy the dip level is going to be more dependent on your put walls on the S&P 500. And that's something that we discuss more on the market memo calls on a usual basis. But I just wanted to today, the real goal was to show you the power of using junk bonds and advanced decline lines, and this is something that, when on the institutional side, I do know that in the institutional side, they did use this. They use this a lot, actually. A lot of equity desks use junk bonds as a gauge on risk sentiment. They have fancy software that tracks this. Here at Checkmate, I actually manually do this myself. There's not going to be a lot of retail traders that track this. Okay, first of all, it's very difficult and it's very tedious to track this on a daily basis, but I do it and I always post it on the Discord every day. So I hope that helps you guys with the junk bonds ADL. And again, this is something that I use more for those longer term bear markets to see longer term trend reversals. Okay, and it was very good indicator. It showed us, it got me out of the tech sector at the end of the year last year, which was great for me. And also, it's going to show us when to buy the dip. Okay, obviously the time for that is not yet. Okay, we're nowhere near close to that yet. Okay, it's still in a downtrend. We still haven't seen a higher high or a higher low being made. But once it does, all right, that's going to be part of our MOAB signal, our mother of all buy the dip signals. All right. So again, trend reversals. Okay, big trend reversals are broadcasted ahead of time with the junk bonds ADL line. And again, we see that risk on, risk off sentiment expressed in junk bonds before we see it in the equities market. Okay. All right, there's a lot more institutions participating in junk bonds than there are in stocks. Okay, so most institutions, they really care about yield. All right, generating that yield for less volatility, risk-adjusted returns. That's like one of the things the Wall Street people always talk about. They don't talk about returns per se. They talk about risk-adjusted returns. All right, and so that's why you see a lot of people getting into junk bonds, or a lot of institutions getting involved in junk bonds. For that stable yield. All right. Okay, any questions on this? Any questions on the junk bonds ADL? This was about, 20, 25 minutes explanation on junk bonds ADL, as well as some of the historical perspectives. If you guys got any questions, post them real quick. I don't see anybody typing. That's fine. So in that case, we'll wrap this up and we'll go back to our regular market memo and going through our trades and such tomorrow. Our Discord invitation link is in the description below. Come join our Discord, be part of our growing community. That's where I post all this junk bonds ADL stuff every night. There's no sub fees, there's no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, and comment. Show us some love, baby. All right, we're going to be back on tomorrow and on Thursday, 10 a.m., 30 minutes after the opening bell of the New York Stock Exchange. Hope to see you guys then. Trade safe.